Hi everyone, thank you all for attending today's webinar on private lending and checkbook control. We are going to get started. Your presenters today are Kelsey Deneen and Emily Menke, and I am your moderator, Brenda Wetzel. If you do have any questions, please make sure to type them into the chat box on the right side of your screen. To get started, we're going to send it on over to Emily.
Good afternoon and welcome, and thank you for joining us this afternoon. To begin, I'm going to speak a little bit about who we are here at Midland IRA and what we do, as well as some of the choices that you have in investing in different types of non-traditional assets. So to begin, we are self-directed IRA administrators, and we also serve as a qualified intermediary for 1031 exchanges. Our main offices are located in Chicago, Illinois, and Fort Myers, Florida. We have over $1 billion in client assets and the full limits of FDIC protection. We also have over 10,000 account holders all over the country. Just so you understand a little bit about how we work, it's important to know that we do not make any commissions. We are not a commission-based company. We do not have any products or investments to sell you, and we work at the full direction of you as the IRA account holder to fully administrate the needs and requirements of investments that you choose. So it is a self-directed IRA, and it is up to you as our client to come to us with the investments that you choose to invest in, and we will certainly help you as far as giving you some direction as far as the paperwork goes and what is required to successfully fund your investment choice. We do not give any legal, tax, or investment advice, but several people in our offices do hold the designation of Certified IRA Services Professional, or CISP. We also have individuals that work for Midland IRA that have backgrounds in the legal field as well as tax field. So we are very knowledgeable staff, and we are happy to help you in any way, shape, or form, but officially we do not give any tax, legal, or investment advice. So as I mentioned just a minute ago, as far as investment choices, there are plenty of options, and we're going to go over a few of them today, but we do not have any products to sell you. So it truly is up to you to find your investment. We always like to say, you know, invest in the things that you know about and the things that you're comfortable with and the things that you know best as far as what opportunities are out there. All of the information that we present here today and in all of our webinars and all of our classes is for educational purposes only. We certainly advise you or allow you to consult with attorneys or accountants or financial advisors before entering into any type of investment product or investment that we would be holding for you here at Midland IRA, as it's important for us to know that you're comfortable with what you're choosing to invest in. Okay, so let's talk a little bit about what a self-directed IRA is. A self-directed IRA is not specifically listed as a type of IRA in the IRS code. Legally, it's the same kind of IRA that many of you may have at your traditional custodian, such as the Fidelities and Charles Schwab's. It's the same kind of IRA as far as what our requirements are as it relates to contributions, distributions, and IRS reporting. We are held to the same standards. The only difference is that a self-directed IRA allows you to invest in non-traditional type assets. So it kind of goes beyond the smaller box that a lot of your traditional custodians will try and say, okay, well, you have a choice of stocks and bonds and mutual funds and annuities. A self-directed IRA typically just allows for a wider array of investment choices. Self-directed IRAs are tax-deferred and sometimes tax-free. As some of you may know, your traditional IRAs, rollover IRAs, SEP IRAs are going to be tax-deferred accounts. So a lot of times when you when you put contributions in, those are tax deferred. Your Roth IRAs are typically after-tax dollars, so the contributions going into those type of an account are after tax, so all the growth usually, depending on when you take your distributions from that account, are going to be tax-free. A self-directed IRA, as I mentioned, allows the investor to choose assets that they know and feel comfortable in investing. A lot of our clients are involved in real estate. It's a big part of the holdings that we have here at Midland IRA, but it doesn't have to be real estate. Some people are comfortable investing in startup companies or private bank stock, things like that. But again, it's important for us to allow you all to invest in the things that you want to pursue and that you're comfortable in putting your money in to grow your retirement. So choices are basically unlimited. There are only two things that are strictly prohibited by the IRS to invest in. And those things are life insurance policies and collectibles. So anything that's deemed a collectible, such as artwork, any kind of coins that are not, there are some precious metals that are absolutely allowed, gold and silver, things like that, but any kind of gems or stones are not going to be allowed. Anything essentially that is difficult to value, and that's the issue as far as the collectibles and why you can't invest in that. But basically anything else is something that, you know, depending on what vehicle you want to use, and we'll talk a little bit more about the Checkbook Control IRAs, and that's one thing that's a benefit, is the Checkbook Control IRAs that we're going to speak about in a few minutes allow you to invest in pretty much anything else. As long as there are ownership documents and, you know, there's something that details exactly what you're investing in, we can probably find a manner in which you can invest in it. So the other thing that I kind of mentioned a bit ago is that 99% of IRA custodians will only hold investments that they sell. So as I mentioned in the beginning, we don't sell any products. However, most of the bigger IRA custodians have products to sell. A lot of them are stocks, funds, and mutual funds. And their business model is based on the fact that they're going to sell you these investments to hold in your IRA. They usually make commission on those, or they get fees per trade, and that's how they make their money. So they only promote those type of investments, and they only allow those type of investments in their IRAs that they hold and they do the reporting for. Now, it doesn't mean, as I mentioned earlier, that there aren't other investment options, but that's the reason why we here at Midland IRA are here for you as the client, is to provide another service so that you can completely diversify your portfolio and invest in things that are non-traditional in nature. As I mentioned a little bit earlier, some of the contributions are tax deductible. Most of the contributions, if it's a tax deferred type of IRA, as I mentioned, those include rollover IRAs, traditional IRAs, SEP IRAs, and simple IRAs, as well as some 401ks. Those are going to be tax deductible contributions. If you're making a contribution to a Roth IRA, those are after-tax dollars, so they're not deductible. However, as I mentioned, the growth inside those Roth IRAs is going to be tax-free. Another thing to keep in mind, and this is very important, is that a lot of IRAs, the traditional IRAs and rollover IRAs, are funded by old 401k plans. So if you think about the way that people are changing jobs so much these days, it's rare anymore that someone goes to work for a company and then doesn't change jobs or change careers even within that same type of field anymore. And every time you leave a job, if you had a 401k plan, you're allowed to roll that over into a traditional IRA. And the good news is, if you are someone who wants to invest in non-traditional type assets, like the kind of assets that we hold here at Midland IRA, then you can roll those old 401k plans into a traditional IRA to self-direct here with us. So a lot of people, when they come to us, they have sometimes 2 or 3 old 401k plans in which their funds are just sitting in some mutual funds, say, or some stocks, not making much money. And they can put all of those into a new traditional IRA here with us and invest in something that they really believe in. And of course, self-directed IRAs are designed to build for your retirement. So the investments that you're going to be investing in here, and we'll talk a little bit more about this later, is for investment purposes only, and the IRA plans that we have here at Midland IRA are designed to provide a vehicle for you to invest and build your retirement. Okay, so here on our slide lists a few of the investment choices that we can help you purchase and help you fund here at Midland IRA. As I mentioned, real estate is a big portion of the investments that we have here. And within the real estate type asset, there's a lot of different ways that you can use your funds and your retirement account to invest in it. You can either go through the direct purchase of real estate, in which your IRA is deeded the property and your IRA outright owns the property. Even within that, there are ways that you can partner your funds with yourself personally or other IRAs to make an investment. You can also invest in real estate in a passive manner, like a secured promissory note. And Kelsey's going to speak in detail about that later on in the presentation. We also have single-member LLCs, which we're going to speak about in more detail in a moment. We have private placements and private stock. As I mentioned, a lot of banks will have some startup bank stock. That's a very popular investment, as well as private placement, so startup companies that are trying to build equity to get started. That's also very popular. You can invest in precious metals, and there are very specific fineness quality that the IRS has deemed as appropriate for IRA investments. And if you're interested in that, we can certainly give you a little bit of guidance, but you can invest in precious metals such as gold and silver with your IRA. And then we also do foreign currency exchange as well as futures trading here at Midland IRA. And as I mentioned, really you can invest in anything that's not strictly prohibited by the IRS. And we already went over those two things that you're not allowed to invest in. But again, if there's something that you're interested in, please give our office a call and we can help you think of maybe a way to structure the investment so that you can use your retirement to invest in those things that you know the best. Okay, so now we're going to talk in a little bit more detail about checkbook IRAs. This is a great vehicle for some of our clients to invest in maybe some non-traditional assets. Basically, the way that this works is it allows you as the IRA holder to have more control over the speed of investment. That's a big plus. We're going to go over some of the benefits here in a minute. And it also allows you to have the check writing authority. So here are a few highlights that we need to talk about. The first one is that you do need an independent qualified party to set up the LLC. Now, I know a lot of you out there may already have some LLCs that you use for investment purposes. A lot of real estate investors specifically will have LLCs that they are investing in properties and either fixing and flipping or buying and holding to give themselves a little bit of protection. It's important to understand, as it relates to your IRA LLC, that this needs to be a brand new LLC that you're setting up. And the reason why is that chances are in the LLCs that you already have set up, you personally are probably the member, or maybe it's you and your spouse, or you and a business partner are the members of the LLC. What we're talking about today is a single member LLC in which your IRA is the only member. So instead of the member being John Smith, let's say, the member would be Midland IRA Inc. for the benefit of John Smith's IRA. So it clearly mentions that the member of the LLC is not Mr. Smith personally, it's the IRA. So that's a very important distinction that we need to make. So within these single member LLCs or Checkbook Control LLCs, we have a couple choices as far as who the manager is. The first one is that the IRA holder, and this is typical, that the IRA holder themselves is going to be the manager. So the IRA is the member, and the IRA holder is the manager of the LLC. This means that you as the client is going to have, as I mentioned, complete check writing ability and signing authority on behalf of the LLC. So what will happen is when you have the paperwork drawn up by this independent third qualified party, it will list the fact that the IRA holder has signing authority and the IRA holder has check writing ability. And you would go ahead and go to a bank once all of the documents are prepared and once all of the documents have been filed with the state with your new EIN number. You're going to go to a bank and set up a bank account in the name of your single member LLC. And what you'll do is you'll direct us here at Midland to go ahead and fund that bank account so that that cash is sitting there available for you to do investments. And once it's there, you are allowed to go ahead and use that LLC. All of the investments that you would make once that LLC is set up and funded is going to be in the name of that single member LLC that you set up. So again, we'll talk about some of the IRA advantages as it relates to these checkbook control LLCs. One of them is you can pool funds. So your new single member LLC can then go and be part of a bigger investment. As I mentioned, it does allow more control on your part as far as the signing of the documents and the sending of funds from that bank account. You wouldn't have to run that through your IRA administrator here at Midland. So if you were to do a real estate transaction without a checkbook control LLC, you would send us the documents to look at, you would send us the documents to sign on behalf of your IRA, and then we would wire the funds directly from your IRA here at Midland for the purchase of the property. If you choose to go through a checkbook control IRA, you would actually be signing the documents on behalf of this LLC and be wiring the funds. Ease of transactions. So because you don't have to send all of the investment documents, whatever it is that you're investing in, through your administrator here at Midland, it allows you to do those transactions, sign on behalf of the LLC, and send funds more quickly than what we can provide for you. We do have a very fast turnaround time, but sometimes we do need a little bit more time to review documents and things like that. It's also cheaper for you as far as our fees go if you're going to be investing in multiple assets. So for example, if you set up a checkbook IRA with us here at Midland and we fund that LLC, as I mentioned, your fees are going to essentially be for the maintenance of that LLC going forward, $295 per year. Once you have that LLC set up, even if you invested, say, in 4 properties, those properties are underneath the umbrella of the single member LLC. So in our eyes, we are going to show the LLC on the books and not the individual 4 properties. So it does save some fees on your end if you're someone who's going to be purchasing multiple properties or, say, buying and fixing and flipping very quickly and within a year, you know, buying 2, 3, 4, 5 properties. And again, it also cuts down on some of the check fees as it relates to your Midland account, because if we are holding the title to the property in the name of the IRA directly, as I mentioned earlier in the presentation, we do need to send out checks for the expenses. And those check fees, granted, if you go through our online portal and request it online, they are $5 per check, but sometimes those can add up, especially, again, if you have multiple assets. So for just a moment, I just want to talk about foreclosures and auction properties a little bit. I'm actually the person here at Midland who processes a lot of the real estate transactions for us. And a lot of times our clients will come to me and they're very interested in purchasing auction properties with the county or going through foreclosures. And one of the challenges that we have here at Midland is, like I said, we do have very fast turnaround times for funding. However, sometimes with some of these counties, they give you less than 24 hours. Once you bid on a property and it's accepted, to go ahead and turn around a wire and fund it. Depending on what time these auctions are, sometimes it's difficult for us to get the proper documentation and be able to turn around a wire within 24 hours. So one of the reasons that we have these checkbook control IRAs is so that our clients are able to set up an LLC in which their IRA is the sole member and they're the manager, and we would fund that LLC, and now all of a sudden, because they have the check writing authority or the ability to wire funds, and they have the signing ability on behalf of their IRA, they're able to go and bid in the name of that single member LLC, and then they're absolutely able to turn around funds almost immediately because they have the ability to go to the bank and send the wire sometimes the same day. And that's an ability that we don't necessarily have here at Midland IRA. So a lot of our clients who are interested in purchasing these properties, either from the county, or I know we have some that were, IRS owned, we've been able to help them through the use of these checkbook control IRAs. And so if any of you are interested in that, we would be happy to answer any questions that you have. But that's one of the bigger uses that we've seen with the checkbook control IRAs here at Midland. So here are a few of the checkbook IRA rules. We've kind of gone over some of these, but let's take a little bit more detailed look. An LLC is an entity established under state laws that limits the liability of its members, and it also provides a conduit for managing a project, property, or investment. As I mentioned, when you are drawing up the paperwork or you're having an attorney draw up the paperwork, it does need to be filed with the state, and each state does have its own fees to maintain that entity each year. So you're going to want to also be familiar with what that cost is going to be as well, and that cost will need to be paid with funds in the IRA. Generally speaking, an IRA holder and or his lineal ascendants and descendants cannot be the managing member of the corporation. In a little bit, Kelsey's going to talk in detail about who the prohibited parties are to your IRA, and you'll see in a minute why this is important. This is because the IRS does not want you to personally have access to your IRA funds, which is why you need an IRA administrator. The possible exception is for these single member LLCs, and we've gone over this a little bit. As I mentioned, they're also called Checkbook Control LLCs. There's a lot of nicknames for them, but it's all speaking to the single member LLC in which the IRA is the sole member. And then another point is the client or non-disqualified third party of their choice is the manager. As I mentioned earlier, the most popular choice is that the IRA holder is the manager, and that is the exception that I just mentioned. If the IRA holder does not want to be the manager, that's not a problem, but it does have to be someone who's a non-prohibited party to the IRA. And the prohibited parties, as I mentioned, Kelsey's going to go over these as well, is your spouse, parents and grandparents, and children and grandchildren, and all of their spouses. So there are quite a few people that are prohibited. Some people, if they don't want to be the manager, will choose to have an attorney or a CPA or a business partner be the manager of their LLC. There are some other choices, but like I mentioned, the majority of the time the IRA holder chooses to be the manager because that does give them more flexibility. As I mentioned just a bit ago, the bank account is established under the name of the LLC, and the manager is the one who has the check writing authority. Now, by nature, because, as I mentioned, any investments that are purchased underneath the Checkbook Control IRA or the LLC, because you don't have to submit that paperwork to anyone here at Midland to review, it does put a lot more responsibility on you as the IRA holder to understand the prohibited rules as far as the IRS code states. So for instance, as I mentioned, we're going to talk in a little bit about who the prohibited parties to the IRA are, and it's critical that you know that you cannot do business with those people. Otherwise, it could risk your IRA. You could be audited and your IRA could be disqualified, and there could also be some steep penalties. So it's important for you as the manager of your single member LLC to completely understand what the prohibited transactions are and who the prohibited parties are so that you don't, not necessarily on purpose, but so you don't accidentally put your IRA at risk. And then we've already talked a little bit about the things that your IRA can't invest in. So even though you have this single member LLC in which you have a lot of control, you still can't be investing in the collectibles, and you still can't be purchasing the life insurance policies. So you have to, again, make sure that you understand what is prohibited and what's an acceptable investment. And with that, I'm going to go ahead and turn this on over to Kelsey to talk a little bit about promissory notes. Okay, I don't know if y'all can hear me. It sounds like we have a little bit of an issue transferring this over to Kelsey. So I'm going to go ahead and talk for a moment about promissory notes until we have that resolved. So as I mentioned, promissory notes is a way that you can invest in real estate in a passive manner. So it's not the direct purchase of real estate, but essentially what this is a mortgage. And these promissory notes are secured by real estate. So essentially what you're doing is, instead of someone going to a Wells Fargo or a Bank of America to get a mortgage, sometimes if people don't qualify and they know someone who has an IRA that is willing to lend them some funds to purchase a home, they can go ahead and have the IRA be the lender, and they would put up that home as security. And that's a way that, that the IRA holder can make an investment in real estate, kind of indirectly, but at the same time having it secured by a property. So as I mentioned, this is a way that you can participate in an investment without committing long-term. Secured promissory notes can be anywhere from 6 months to, sometimes I've seen the typical 30-year mortgage, or anything in between. And it kind of depends on who you're loaning to as to what term of the loan, the borrower and the lender can agree to. A lot of times, for example, you as the lender, your IRA as the lender, could be loaning to an investment group who's going to be purchasing and flipping homes. So they may only need that loan, say, for a year. In a different sense, maybe you are lending to someone who is a family friend and they're getting a traditional mortgage, and so sometimes those loan terms are 15 or 30 years. So it really depends on who the borrower is and what agreement you, as the IRA holder and the lender, and them as the borrower can come to as far as what the terms of the loan can be. The benefit of doing this in a self-directed IRA is there isn't any standard as far as interest rate necessarily or payments. I've seen payments anywhere from interest only with balloons to payments monthly that are principal and interest and amortized. It's really interesting because you as the lender can absolutely negotiate all of those terms with the borrower. And it really comes down to what both of you want to agree to. You can avoid UBIT or unrelated business income tax issues if you're investing in a leveraged entity. It's important to know because this type of an investment is done with a self-directed IRA, it's going to be tax-deferred or tax-free as far as the returns. So as I mentioned earlier, if you're doing this in a tax-deferred type of an account, like a traditional IRA or a SEP IRA, for example, all of the principal and interest payments are going to be coming back into the IRA. After you've funded the note, that borrower is going to be sending the payments back to your IRA, just like they would a bank. As I mentioned, it's kind of like a mortgage. And those payments are going to go back into your IRA, either tax-deferred if it's done within a tax-deferred type of an account, or tax-free if it's done in a tax-free account like a Roth IRA. A lot of times, as I mentioned, they can be short-term investments, which allows for greater flexibility. So, for example, it's a little bit different than purchasing real estate where you may be hanging on to that for either rental purposes or appreciation value over years. Some of these promissory notes can be as short as 6 months to 3 years. So you're not necessarily locked into something long-term. Also, typical interest rates on these type of loans are, say, 6 to 12%. I've seen up to, I believe the rules here and the law here in Florida is for real estate investments, it can go all the way up to 18%. So those are higher, obviously, than average interest rates, and certainly higher than your typical rate of return as far as the stock market goes. IRA investments are required to be held by a third-party administrator, which is us here at Midland IRA. That's the service that we provide to you. As I mentioned, you're not allowed to be the administrator of your own IRA, which is why we are in business. The lender on the promissory notes is going to be in the name of the IRA. So as I mentioned earlier, when we were talking about the Checkbook Control IRA, it's the same idea. The lender on these type of documents is going to be Midland IRA, Inc. for the benefit of Jane Smith's IRA with her account number, or the client's name with their account number. So it strictly appears in not only the promissory note itself, but on the mortgage, which is the security instrument for the loan, as well as the settlement statement, if it's closing at an attorney's office or a title company, that the lender is the IRA. So that's typically where you would see your bank come in as the mortgage holder. The IRA administrator is the legal holder of the note. So after closing on these type of transactions, we actually ask that the original promissory note is sent here to Midland IRA, and we will hold that as the document of record for the investment. All of the documents are signed, read, and approved by you as the client prior to funding. So basically, when the documents are prepared by the closing agent, we're going to receive a copy of the settlement statement, as I mentioned, showing the IRA as the lender, as well as the note and the mortgage. We also ask for like a title commitment or something that is showing, that there's clear title. We also ask for proof of insurance. Now, those are some of the requirements that you can waive as our client. You don't have to have those things, but we suggest that you do have them prior to funding. But you as the client is going to make sure that you understand and you approve all of the terms in all of those documents before we send funds out. And as I mentioned earlier, the interest and principal payments must be sent to Midland IRA. So as I said, all of the income associated with that investment is going to come back into the IRA, either tax-deferred or tax-free. Okay, so here is an example of a secure promissory note transaction. So a lot of times the loan to value ratio is going to be very low. So we're talking, you know, much lower than your normal transaction. A lot of times, as I mentioned, it's going to be secured by a first or second position mortgage. So this means basically that if you are lending on a secured basis, and say you're in first position, say you're lending to someone who's purchasing a property and they don't have enough funds, if that borrower defaults on those payments, just like your normal mortgage would go, your bank is typically going to foreclose and take back the property, right? The same thing happens if the IRA is the lender. If that borrower starts defaulting on payments, obviously you do have to go through the legal process of foreclosure, and you have to do that, in which, you know, you're going to need to get an attorney involved. But basically what you would do at that point would be to foreclose and take back that security or that real estate property. So instead of you having a promissory note, secured promissory note in your IRA in which you're collecting interest and payments or principal and interest payments, all of a sudden you would have the real estate. Again, typical secured promissory notes are short term. They have a higher interest rate. And a lot of times the borrower will offer to pay the costs. So typically there's an appraisal involved, attorney's fees for the preparation of the documents, any kind of doc stamps for the recording of the mortgage, say. A lot of times these borrowers, because they can't get a typical mortgage, will offer to pay the IRA costs, sometimes the IRA fees, as well as all of the costs associated with preparing the documents. On the right side, you'll see our documents required to fund the mortgage. As I mentioned, we do have our bi-direction letter or purchase authorization form, which essentially is an internal form here at Midland that has a lot of the details of the loan on it. It is also the form that directs us to send the funds either to an attorney's office typically, or the closing agent, a title company, who is responsible then for receiving the funds for the investment and making sure that all of the proper documentation is recorded and returned to the proper parties. We will need the promissory note itself, which details the IRA holder as the lender, and also the place of payment here at Midland IRA, so that we can make sure that those payments go right back into the IRAs. We need the mortgage as well, and the settlement statement. And as I mentioned, the hazard insurance and the title insurance are recommended, but that's an optional requirement. You can waive them as our client if you didn't want to require them. And then the wiring instructions. So those are the documents that we would need in order to fund this type of an investment. All right, and I think that Kelsey is now ready to go ahead and talk about these important rules. So I'm going to go ahead and pass it on over to Kelsey.
Okay, perfect. And hopefully everyone can hear me now. We were having some issues. We got a brand new system that we're using for these online events, and I'm now connected. So I'm going to go over the important rules as far as title to assets. How would you actually put the title of lender on that promissory note to reflect that your IRA was the lender? Very, very important that you always title it properly to show that it's an investment held within your IRA and not an investment that you hold personally. With IRAs, the big issue is taxation, right? That's why everybody does their investments tax sheltered within IRAs here. So to reflect that it is truly an investment within the IRA and that it's tax sheltered, you have to make sure the title of your IRA is listed on all note documentation as the lender. Now the way we do that is you'll see right here, Midland IRA Inc., FBO, John Smith, IRA number 12345. That would be the title of the actual lender on all note and mortgage documentation. Now you have to make sure as well, keep in mind, we do not prepare legal documents. So if you were to contact us and explain that you were loaning money out of your IRA, we're not going to provide you with a standard promissory note or mortgage template. That would be legal document preparation, and of course everyone's legal documents vary depending on the deal. So instead of providing any sort of generic legal templates, we instruct you to obtain those from your attorneys or any sort of legal advisor. So we do not prepare any legal documents. Those will have to be prepared prior to loaning out the money from your IRA. As far as interest rates go, those terms are fully negotiable between you as the lender out of your IRA and your borrower. So if you're looking for a particular interest rate, let's say if someone has poor credit and they'd be getting a higher interest rate from a more traditional institution like a Wells Fargo or something of that nature, if you're willing to offer them a preferred interest rate for a little bit lower, you're more than welcome to do that. So interest rates are fully negotiable. You just have to make sure that you're not breaking any state usury laws. And again, because we don't prepare those loan documents, it's one of those conversations you're going to want to have with whoever is providing you with legal services and preparing that legal documentation. As far as percent ownership goes, maybe your IRA is not loaning 100% of the principal. Maybe, especially in situations where it's a very large loan, and we see that most commonly on bridge loans or commercial properties, where it's millions of dollars are the principal. Obviously, your IRA might not be loaning the full amount. So if you are participating, and sometimes we call that a participation note, so you are one of many lenders, you can do that, and the note documentation will reflect to what percentage and degree of ownership you'll have in the debt. So your IRA will be one of many lenders, perfectly allowable in an IRA here. You just have to make sure the loan documentation, again, reflects what amount you'll be loaning and what percentage of the debt your IRA would effectively own. All interest and principal must be returned to the IRA. So again, you're offering this loan out of your IRA account. It is not a personal investment. So all principal and interest payments from the borrower must return to your IRA here. Now, when they're deposited in the IRA here, they are effectively tax sheltered. If that payment was to go to you personally and you deposit that in your personal bank account, you have now just taken what we call effective receipt of your IRA funds, and they are now taxable. So very, very important, even if you have a Roth IRA and it's already after tax, that money must return to your IRA here. The IRA owns the note, it is the lender, it collects all payments of interest and principal. Now lastly, we'll frequently hear people who call in and say, you know what, I would love to loan money out of my IRA to a family member. And at that point, we have to break down prohibited parties for them. So moving forward, prohibited parties are applicable for all IRAs, no matter what you're doing, be it real estate, private lending, any type of investment. Prohibited parties are an IRS regulation. It's federal. These are the people who cannot do business with your IRA. So that includes buy a property, sell a property, provide you with property management, or borrow money from you. So these are all the individuals who cannot borrow money from your IRA. All right, now as you'll see, it is your linear family members. So you cannot loan money out of your IRA to yourself, to your spouse, to your lineal ascendants, such as your mother, your father, your grandparents, and then going down your family tree. So yourself, your spouse, your son, your daughter-in-law, and your grandchildren and their spouses. So up and down your family tree, lineal ascendants and descendants are prohibited from borrowing from your IRA. Now, you'll notice non-linear family members are not on this list. And to give you an example, a non-lineal family member would be someone like a brother, a sister, a cousin, a niece, a nephew, a godparent. So many people will set up IRAs here and loan to a non-linear family member, such as a brother or a sister or a niece, a nephew, etc. Now, if you're doing that, you must make sure that you're treating them fairly. So you're not overcharging them in interest or undercharging them just because they happen to be a family member. So again, this prohibited parties, I'm a very visual person, so this is a nice little slide to save. Up and down your family tree, these are people who cannot do business with your IRA. Now, one common confusion that we get here is, well, Kelsey, I understand I can't sell or buy or loan money to these people, but I've been told in the past that I can team up with one of these folks to do a new purchase. And that is absolutely correct. So let's make the distinguish in this situation here. So your IRA cannot loan money to yourself personally or to your spouse or any of these people. But what if you don't have enough money in your IRA to do a new investment, such as maybe buy a piece of real estate? If that's the case, you can team up with these people, because what you're doing is your IRA will own a certain percentage of the property, one of these parties will own the other percentage. So for sake of example, let's say 50-50. So your IRA buys half a property from a third party. Yourself personally, or maybe your spouse buys the other half of the property. You are not selling or buying to one another. What you're doing is you're teaming up. Your IRA is buying half from a third party. One of these prohibited parties is buying the other half from a third party. You are not selling or buying to one another. You just happen to be teaming up to buy property from the same third party. So hopefully everybody understands that. It's not that you can't team up with these people, it's that you cannot directly buy, sell, rent, or loan money to these people. All right, so IRAs can team up with anybody if you're investing in a new purchase from a third party. All right. Now, what if you want to start investing using your IRA? What are exactly the steps? What are the timelines? The first thing you do is you have to open up a self-directed IRA. And the way you do that is we give you an IRA application. I believe Brenda was nice enough to upload, we have handouts that we can send out to attendees. And I do believe she uploaded an application which includes a transfer form. That's our most common application. That's to open up an IRA here and actually transfer money over from an existing IRA account. So you'd have to complete an application to open up an IRA here. Now, when you look at the application, do not be confused if you don't see a box that says Self-Directed IRA. Many people will call me and say, Kelsey, I'm looking at the application and I see I have the option to open up a traditional IRA, a Roth IRA, a SEP IRA, a simple IRA, but nowhere on this application do I see opening up a self-directed IRA. And the way I explain it is any IRA here can be self-directed. You can do real estate, you can do promissory notes, there's a huge range of investment options. The difference is who holds your money and what do they allow you to invest in using that money. So Midland itself is a self-directed administrator. We allow all these different types of investments. So any IRA here can do these. It can do notes, it can do real estate. We do not restrict your options. So we're a self-directed administrator. So any IRA on that application can do these things. The next step, you open up your IRA, that gets opened within 1 business day. We're very fast. The next part is, okay, where is the money coming from? Are you moving over money from an existing IRA? Are you rolling over an old employer plan like a 401k, a pension, a thrift savings plan, sometimes referred to as a TSP? There's things called 403Bs, 457s. I mean, there's many, many different types of retirement accounts out there. So you would just want to let us know what type of retirement account you currently have, and we'll instruct you on how to move it over. Like Emily said, usually if it's through an employer, so if you have a retirement plan through an employer, it must either be a previous employer, so you've terminated your service and moved on to a new job, or you have to be retirement age. And usually if you call up where your 401k is held, or any other employer plan for that matter, you're going to call them up and you're going to ask them, when am I eligible to do a direct rollover? That's the term you want to use. A direct rollover is where they will actually send that money straight out of your 401k or employer plan where it's held now to the new IRA here. And the reason you want to ask for a direct rollover is because it goes directly to the IRA here. It never touches your hands. If they were to send you the money personally, that's what we call an indirect rollover, where it goes to you first and then you later deposit it in the IRA here. The only problem with that is they try to withhold taxes. So with 401ks, there's a mandatory 20% withholding. So if your 401k cuts you a check and says, you know what, we're just going to cut you the check, you can send it into Midland, don't let them do that, because they're going to withhold 20% of that for taxes. And you actually have to come up with 20% out of pocket to deposit that into the IRA here and make sure it's not taxable. So it's the easiest thing to do, just ask for a direct rollover from your current employer plan to the new IRA here. The other option, maybe you don't have an IRA, maybe you don't have an employer plan or any other type of retirement account. Maybe this is your very first retirement account. If you want to, you can make an IRA contribution. The contribution limits for an IRA here are identical to an IRA anywhere else. That's the beauty of having federal regulations. They're universal. So you can set up an IRA here and actually fund it via an IRA contribution. Now, depending on the type of IRA you open, contribution limits vary. So be sure to ask us. If you're self-employed, pat yourself on the back because you can actually contribute more into your IRA on a yearly basis. So again, we're happy to get on a call with you one-on-one and talk about the difference in types of IRAs and contribution limits. Just know if you're self-employed and you have enough earned income, you can usually contribute a very large amount compared to non-self-employed people who usually have a traditional or a Roth IRA where contribution limits are only $5,500 or $6,500 if you're over the age of 50. So we set up the IRA, you move over some money or you make a contribution and it's now funded. Well, what's the next step? You have to tell us what you're interested in doing. So you need to tell us if you're interested in buying a piece of real estate, if you're interested in loaning the money out and doing a mortgage note or a secured note. Maybe you're interested in setting up a Checkbook Control LLC. That way you can go out and start bidding at things at auction. Any of those options will work. You just have to give us an idea of where you're looking to go, and we will make sure to guide you in the right direction and get you the necessary forms on our side to get the process started. Okay, so I know Brenda is putting together questions. If you do have any follow-up questions, please type them into the chat box. You should have on your little control panel a chat box to type in any sort of questions or comments. And I know Brenda is putting them together right now so we can have some quick Q&A.
All right, everybody. Thank you all. We are going to get to the questions now. I'm going to have Kelsey and Emily take turns answering each question. The first one is, can I invest in tax deeds or tax lien certificates?
All right. Hopefully everyone can hear me. Tax liens or tax deed certificates. It is possible. What will happen at that point is if you're buying them at auction, you're going to have that Checkbook Control LLC set up. Now, that's the setup Emily discussed where you have a single member LLC that you're the manager of. That's necessary for auction settings where you're buying tax liens or tax deeds at auction. If you're not buying them at auction, maybe they're already owned by the county, that's perfectly fine as well. At that point, you don't have to have the Checkbook Control LLC necessarily because you're allowed to essentially purchase them at a little bit more flexible timeline. So you can buy them straight from the county. You can even buy them from third parties. So if there's someone out there who already owns this tax deed or tax lien certificate and you're interested in buying it from them in your IRA, that's possible as well. So yes, absolutely.
All right, Emily, do contributions to a Roth IRA have to be earned income?
So yes, you do need to have enough earned income to support the amount of money that you are making as a contribution to a Roth IRA. So earned income is going to be wages, salaries, tips, all of those type of things that would W-2 income, things like that. But yes, and as Kelsey mentioned, your contribution limit for 2015 as well as 2016 is $5,500, or if you're over the age of 50, it's going to be $6,500. So in order to max out those contributions, you do have to have at least that much income in earned income to support the contribution, yes.
All right, Kelsey, can you have both a 401k and a Roth 401k at the same time as a Roth IRA?
Okay, yes, you absolutely can. The question is at that point is contribution. So you can have both plans in existence at the same time, but when you're making contributions on a yearly basis, you have to get with your CPA or tax advisor to figure out if you're maxing out one plan, how much are you still eligible to contribute to the other. So absolutely, yes, you can have the accounts at the same time. The only thing you're going to be limited on is contributions if you're trying to max out both.
All right, Emily, does the LLC have to be a U.S. LLC or can it be overseas? Or Kelsey, if you want to answer this one.
Sure, I can answer that. So a Checkbook Control LLC, because of certain regulations, IRA holders are not allowed to have foreign bank accounts. So essentially any Checkbook Control LLC that you're using for checkbook purposes has to be a U.S. domiciled LLC.
All right. I believe the next question was already answered. So the next one, does it matter if the LLC, okay, is a U.S. LLC or can be a foreign LLC? That was just answered. Okay, so what is being said about Checkbook IRA LLCs? Does that apply to their Midland HSA?
Brenda, can you repeat that question one more time?
Is what is being said about the Checkbook IRA LLC apply to their Midland HSA?
Okay, so essentially the question might be, can I have checkbook control of my HSA as well? And if that is indeed the question, then yes, an HSA here has the same investment options as an IRA. So if the interest was to set up a Checkbook Control LLC for your HSA account, that can be done, absolutely.
All right, Emily, can a husband and a wife, each with an individual self-directed IRA with Midland, own together an LLC?
Okay, so here are your options as it relates to LLCs with a husband and wife. Basically, one option is to create a multi-member LLC in which both IRAs are members. So you can have an LLC in which both the husband's IRA and the wife's LLC are members, but that doesn't quite fit under the same regulations or the rules as far as the manager goes of that LLC. If you choose to do a multi-member LLC, which both IRAs are the member, then neither one of you could be the manager because you would each be prohibited to each other's IRA. So in that instance, if you choose to do that type of LLC, which is absolutely possible, you would need to pick a manager who is a non-prohibited party to each of your IRAs. So as Kelsey had mentioned when she went over the prohibited people, it couldn't be either one of you two. It couldn't be either one of your parents, grandparents, children, grandchildren, or spouses. So as I mentioned earlier, some people will choose to have a CPA or an attorney or a business partner or somebody that's completely unrelated to them be the manager of that LLC. That is one option. The other option for you, if you both had self-directed IRAs, is that each of you would have your own single-member LLC in which you would be the managing member, and then you could partner those LLCs together on investments. So there is a way that you can still utilize each of your IRAs. You would just have a choice to make, either create the multi-member or each of you have a single-member LLC in which you're the manager and then partner those LLCs on investments.
All right, thank you. Kelsey, what would be the reason not to have a checkbook IRA?
Okay, so reasons against the checkbook. Essentially, it is an LLC, so you have to be familiar with maintaining an LLC. So that includes record keeping, knowing prohibited transactions. So let's say you weren't on this webinar and you set up a Checkbook Control LLC, and now you have that checkbook. It gives you a lot of freedom and a lot of flexibility because now you can access the funds immediately with your checkbook. However, there's no one looking over your shoulder anymore because we are not conducting the transactions directly in your IRA here. If Emily's doing a real estate transaction, she's reviewing the closing documents, she's making sure the title of your IRA is listed on there as the buyer, she's speaking to you about the investment when it's closing, etc. So if she sees something that is not proper, if she sees a title on there that's not reflecting your IRA correctly, she's going to take the initiative to have it corrected. If you're doing it through a Checkbook Control LLC, you have to know the rules. You have to know prohibited parties and prohibited transactions. And if you want, we do have a guide to prohibited transactions and rules that you can put as a reference manual in your records. But that would be one of the big drawbacks, I would say, is you have to be responsible enough to keep track of the record keeping, all the investments you're making sure they're titled properly in the name of your Checkbook Control LLC. You have to obviously pay the state filing fee every year to keep the LLC active. So it puts a little bit more responsibility on your shoulders for the sake of convenience. And you absolutely have to know the prohibited transactions and prohibited parties rules in and out to make sure you don't do something improper with your IRA money.
All right, thank you, Emily. I retired in the last year and am 55 years old. Income stream is pension, dividends, and rental income. What monies qualify to be put into an IRA?
Okay, so basically the retirement income and the interest and dividends is definitely not earned income. As far as the rental income, I don't believe that would be either. I would absolutely check with your CPA or accountant as far as what you have and your financial situation and what may qualify as earned income. But none of those things that were mentioned would qualify as earned income to my knowledge.
All right, Kelsey, I was thinking of the self-directed IRA for purchase of a second home and also for land purchase investing. Would there be any downside to either of those?
Yes, absolutely. The first one is the purchase of a second home. You would never purchase a second home within an IRA because It has to be for investment purposes only, no personal use. So when you say a second home, if you're talking about buying a residential property to rent out, that's an investment, that would be allowed. A second home that you're truly using as a residence for yourself would be prohibited, because again, anything you buy in your IRA, you can have no personal use of. So that includes a second home if your intent was to live in that property. So no personal use whatsoever, investment only. And then you mentioned land purchase, investing. You could absolutely buy land as an investment within an IRA here. Again, you have to make sure the land you're not buying from a prohibited party. So for example, if you currently own that land in your personal LLC, or maybe your son or your daughter owns the land and wanted to sell it to your IRA, that would not be allowed because then you're dealing with prohibited parties. So the rule of thumb is it has to be for investment purposes, no personal use whatsoever, and you have to do business in your IRA with arm's length individuals, someone who is not a prohibited party.
All right, thank you. Emily, if you already have an S-Corp set up for real estate, one owner and one member, do you need to set up a separate LLC?
Okay, so basically, as I had mentioned earlier in the presentation, if you have an LLC set up in which you are individually the member and you are the manager, yes, you would need to set up an LLC because the member of the LLC has to explicitly detail that it's the IRA that's the member, not you personally. So the member would need to be Midland IRA Inc. for the benefit of your name and your IRA number assigned to you here at Midland. So yes, you would need to set up a separate LLC. And I believe there may have been a second part to that question in which there was an IRA at another firm, about $10,000, that you were interested in possibly self-directing here at Midland.
Yes, the question, Emily, was, I already have an IRA with another firm. How do you transfer the funds, which is $10,000, to the self-directed IRA, and what are the annual fees with you?
Okay, so basically, in order, if you wanted to go ahead and open up an IRA here with us and transfer the funds over, it is $50 to open the account initially. As far as the annual fees on a $10,000 account here, we actually do give you a couple options, and what we can do is send you a fee schedule after the presentation. It's also available on our website. But basically, for $10,000, you're best on the value-based fee schedule, which would be $195 per year to maintain. Now, that is on top of the transaction fees, depending on what type of transaction you're going to do for us and what type of asset you're purchasing. So I'm absolutely happy to email you a fee schedule, or, again, it's available online for you to view as well.
All right, and also just so you all know, the fee schedule is inside the application, which was uploaded to the handouts. All right, Kelsey, what is the process to purchase a flip property via a bank loan where the IRA will be the owner and also will fund the down payment?
Okay, perfect. So this is a situation where the IRA does not have enough money to buy 100% of the property that is being rehabbed and flipped. So if that's the case, IRAs can borrow money, all right? So the IRA is actually going to take out a mortgage. Now, the only type of debt an IRA can take out is what we call non-recourse. And non-recourse means you as the IRA holder are not offering a personal guarantee. So if your IRA gets that loan, gets a mortgage to buy that property, if something were to happen and you cannot pay the lender back, that lender would then foreclose on the property in your IRA here. The non-recourse part still means there's collateral. It's the property you're buying. What the non-recourse means for you is there's no personal guarantee, and that lender can go after the property in your IRA, but not after you personally or your personal assets. So again, that's an IRS regulation where the IRS has said the only type of debt you can use in an IRA is a non-recourse loan. Now, as far as the down payment, that obviously comes out of the IRA. Do be warned, non-recourse loans, because there's no personal guarantee, require a larger down payment than other types of loans. So on average, we usually see 30 to 50%. Now, that varies, obviously, depending on who your lender is. But like I said, because there's no other recourse besides the property itself, they usually want a larger amount down. What that means is the IRA's borrowed money to rehab the property. Because the IRA owns property, it has to pay all the rehab expenses. So make sure you give yourself a good cash buffer in your IRA after closing to fix up the property, because the IRA must pay all of those expenses to rehab the property. If your lender is requiring monthly mortgage payments or something of that nature, that's another expense to factor in. So those mortgage payments have to come directly out of the IRA and be sent to the lender. Once you sell the property, obviously the loan is paid off and the proceeds will return to your IRA here. Now, when you borrow money in an IRA, ask for our debt financing article, because the article talks about how debt financing works and there might be tax implications. There's two taxes called unrelated business income tax and unrelated debt finance income tax. And like I said, we give you a very useful article for you to review with your tax advisor that talks about these two taxes and how they might apply to the percentage of the deal that is leveraged. The percentage of your deal that is cash, meaning let's say that 40% you put down cash out of your IRA, that percentage is free and clear. It is perfectly tax sheltered like usual. It is only the percentage that is leveraged that you might have to pay those taxes on. So again, ask us for that article and we'll be happy to send it over to you.
All right, perfect. Thank you, Kelsey. Emily, suppose the initial money provided to fund the LLC is $500,000, and later the IRA holder wants to add more IRA funds from another one of her IRA accounts to the LLC. Can that be done?
Okay, so what this sounds like to me, and I need to make sure I understand exactly what the question is. It sounds like they're asking if there's a single member LLC with an initial funding of $500,000 from one of the IRAs here at Midland, and then the IRA holder wants to add more funds. That's not a problem at all. When you're saying from another IRA account, I'm assuming that means at another custodian. If that's the case, then absolutely that IRA holder could certainly transfer the funds back here to Midland, do an IRA to IRA transfer, and then do an additional funding of the LLC in any additional amount that they're looking to do. I think that's what the question is. And if not, please clarify.
All right, thank you. Kelsey, is a spouse's parents prohibited? What if we were divorced?
Okay, so a spouse is prohibited to your IRA. They were on that list of prohibited parties. Now, if you recall, it says your linear ascendants and descendants. Technically, your spouse's parents are not one of your linear ascendants, meaning if they were not in existence, you would still be born. So what many attorneys will say is if you look at the Internal Revenue Code 4975 and the specific section you're looking for is E6, it defines a family member for the purposes of disqualified person as any individual shall include his spouse, ancestor, lineal descendant, and any spouse of a lineal descendant. So again, I'll repeat that. Any individual shall include his spouse, his ancestor, lineal descendant, meaning their children, and any spouse of a lineal descendant. Nowhere on there do they say essentially the parents of your spouse. So many attorneys will say that is perfectly fine. Again, you do want to operate with fair market values. So just because they happen to be in the family, you're not overcharging or undercharging them. Once you divorce, if your spouse were to want to do business with your IRA, obviously while you're married, they're prohibited. But once you divorce, they are no longer your spouse. So again, same rule of thumb. If you're doing business with them and you do have a relationship, be it an ex-spouse, still treat them at fair market values. Even though you might not want to, you still have to. So that's how I would say to deal with those.
All right, thank you. Emily, can you focus on the checkbook control aspect? They are interested in the bookkeeping requirements.
Okay, so I think that you're asking basically once the LLC is funded, what are the responsibilities as far as the record keeping? And if that is the case, then yes, you as the manager of the LLC would be responsible for essentially doing all of the accounting for the funds that come in and out of that bank account, as well as the record retention and documentation. Meaning that if you say you had $500,000 to fund the LLC and that you are purchasing multiple properties, the same type of rules apply in the sense that all of the expenses for those assets would need to be paid from cash in that bank account, and all the income would go back into that bank account as well. You need to make sure that you're not commingling personal funds. And you would be responsible for the bookkeeping as far as the reconciliation goes and the cash in and out, making sure that those are only for the IRA held assets. As well, making sure that you understand, to keep the balances and you keep all the documentation. And what we do ask you to do is every year we ask you to provide to us the value of that LLC. So for instance, say that LLC owned 2 properties. You're going to need to give us the combined value of the cash that's left in the bank account plus the value of both of those properties, because we are required to report to the IRS each year a fair market value of that asset. So it would be up to you as the manager of that single member LLC to make sure that you are keeping the records and the books as far as the cash that's still in that bank account, which would be, of course, all funded by the IRA, or expenses and income as it relates to those assets, as well as the value of whatever assets are being held within the LLC.
All right, Kelsey, a pension check was sent to them but addressed to Midland FBO, their name. Is that okay?
Okay, so in this situation, somebody opened up a new IRA with us, and they had a pension that they were moving money from. So they contacted their pension, and the pension cut a check that was mailed to the actual holder, so them personally, but it was made payable to Midland IRA for benefit of their name. That is perfectly fine. And actually, we still consider that a direct rollover. Some companies do require that they mail the check to you just for security reasons, but the check is made payable to your new IRA here. What you want to do is you want to forward that on to us. That way we can deposit it into your new IRA. And that will show a movement of money straight out of your old pension into the new IRA here. The money is never deposited in your personal bank account, therefore it's not taxable. So that's perfectly fine. Sometimes it happens if they're not willing to send the money straight to us. Just make sure you forward us that check. For anybody who is getting checks cut to them, keep in mind there's a 60-day rollover window where you only have 60 days to get that money deposited before it becomes taxable. So just make sure if you're initiating rollovers that they get to your new IRA here as soon as possible.
All right, Emily, if you are still working for an employer but also got a job with another employer, can you do a rollover to a new IRA?
So typically, and I believe that Kelsey spoke to this a little bit, as far as 401k plans go, usually you have to completely sever service from the employer before you're eligible to roll that into a self-directed IRA or an IRA anywhere. Typically, you do have to sever service or, refrain from being an employee there in order to move those funds. You can always call the administrator of the plan and ask them if you can have access to all or a portion of it to roll into an IRA. Sometimes I've seen in the past some employers, the way that 401k plan was set up originally, will allow you to have access to a portion of it and roll it into an IRA. So it's always worth a phone call. Typically not, but again, the most important thing is the sever service from.
Emily, we lost sound. I don't know what exactly happened. We'll skip to the next question until we can get Emily back. So, Kelsey, if you've already purchased a second home, can you transfer the mortgage to a self-directed IRA?
Okay, so the key description in that question was second home. So again, if you purchased a home that you'll be living in, even if it's not your primary residence, it's a secondary residence, that cannot work for an IRA. So with an IRA, it has to be investment only. So regardless of if from the very beginning you decided to use your IRA funds to finance the purchase of that home, it's not going to work because it's something you're going to be using personally. You can only use IRA funds for investment purposes. No personal use of the property is allowed. All right, next question looks like, can you buy a boat through an IRA? Now, this is allowed, but again, it has to be for investment purposes, meaning you're not allowed to use that boat personally, and honestly, the best way to show that it is for investment purposes is either by renting the boat out or even flipping it. But again, when people come to me with that question, I basically quote the IRS code back to them. I say, is it a collectible? Is it life insurance? Just so that boat is not categorized as a collectible for any reason, you can buy it in your IRA. And again, no personal use. It has to be investment only.
All right, Kelsey, another question. Can you invest in a business, either a new or existing?
Okay. Absolutely. Think about it. When you do the stock market, what are you investing in? You know, you're investing in stock through a stock that a business is offering. So yes, you can invest in a business, either new or existing. The key question when investing in a business is who is the owner of the business and who manages the business. So the business cannot be owned or managed by those prohibited parties. So to give you an easy example, if you wanted to invest in a new startup company, it's a new technology or maybe medical device company, and you think, you know, it's really going to be a very successful company, you've done your research, you like the way they're structured, your IRA can absolutely invest in them. You can do a note investment, you can do an equity investment, whatever you're interested in doing. The key factor is that business cannot be too close to you. So it cannot be a business that you own, that you manage, that any of your prohibited parties, meaning yourself, your spouse, your children, your grandchildren, those people cannot own a majority percentage, so 50% more, and they cannot have managerial control over the business. So again, it needs to be arm's length. It has to be a business that is far enough removed from you so you're not engaging in any self-dealing.
All right, thank you. Emily, do you require earnings first as self-employed for a contribution?
Okay, so I think what you're asking is if you're self-employed and you pay yourself, can that be used for a contribution? And the answer is yes. And as Kelsey was mentioning, if you are self-employed, you're eligible to set up a SEP IRA, which is essentially a tax-deferred type of IRA in which you can make higher than average contributions. So that may absolutely be beneficial for you.
All right, Kelsey, can my son and I buy a home together and use it as a vacation home?
Okay, so your son and your IRA can absolutely team up to buy a property together. But again, as we discussed, the key feature is it has to be investment only, no personal use. So a vacation home would absolutely not qualify. If you wanted to buy a vacation home and rent it out, that would be perfectly fine. That's a rental property. So anything that you're renting out with no personal use would be allowed.
All right, thank you. Emily, can an HSA be rolled into an IRA? Or Kelsey, if you want to get this one.
Yeah, absolutely. I do believe with HSA accounts, you are allowed to initially fund them. It's restricted how much you can roll over. But on a regular basis, no. I believe it is just one time, and there's a limited amount that you can roll over to an HSA.
All right, Emily, I am looking to borrow against my property that is owned free and clear and is currently in my Midland IRA. How would I find someone that would like to loan me money on the property?
Okay, so if you currently own a property that's 100% owned by your IRA here at Midland and you want to essentially borrow money for rehab purposes or whatever else you're looking at, we honestly can't put you in touch with a private lender per se, but what I can do is we can send you our resource list. There are some institutions and lenders that will lend on a non-recourse basis. You're not going to find that Bank of America or Wells Fargo or any of the bigger banks will do that, but some of the smaller banks do. And actually, there are some banks nationally that have non-recourse departments because they understand that IRA owners want to borrow money for their real estate purchases or their rehab. So I can send you our resource list, and you can take a look at that. There are some on there that our clients have used previously in the past.
All right, Kelsey, if you can invest in a business, which you can, I understand you can take a reasonable salary to run the business. Can you explain how this works?
Okay. So if you are using your IRA funds to invest in a business that you are managing and making a salary off of, that's a very gray area. There's certain companies that allow what are called ROBs, rollover as business startups. Personally, here at Midland, we don't touch them because it is very gray. If the IRS were to look at that, and ROBs have had a very high frequency of being audited for that reason, if you look at it, essentially there's a personal benefit where you are using your retirement money to fund a business that you are managing and making a salary out of. So essentially, you're paying yourself out of your IRA. So that's a very gray area, and it's very dangerous. So if you're thinking about doing that, first of all, make sure you talk to a tax attorney, someone who can interpret the IRS code for you and make a recommendation. If it's structured properly, and again, the key is the reasonable salary, things of that nature. If you structure it properly and you have legal advice that is telling you they do not see an issue with that, which honestly, if it was me, I would get in writing. If you have that, then you can proceed. However, like I said, we don't touch certain versions of that, like a ROB, a rollover as business startup. It's a very gray area, and if you're starting to pay yourself a salary, even though it's reasonable, you're opening yourself up to possible audits. So just be very, very careful and make sure you get the proper legal advice.
All right, thank you. Emily, can I change my current rental real estate investment into a Checkbook Control IRA? Any additional costs to transfer, or is this only for purchasing properties for flipping?
Okay, so if you do have a piece of real estate in your Midland IRA currently, and you want to set up a Checkbook Control IRA, you would go through the process of setting up the single member LLC, which does have costs to it. Just the fact of getting the documents prepared and filing with the state and all of those things that I talked about, there are costs to that. But as far as moving that rental into the single member LLC, that's not a problem for us at all. There would need to be a deed prepared that transferred the ownership from your Midland IRA Inc. for the benefit of your IRA into that newly set up single member LLC. So it would be the cost of preparing the deed, but on our end it would essentially just be moving the value and that real estate asset into the single member LLC, which isn't complicated at all. As I mentioned, it's just essentially executing a deed and having that recorded.
All right, Kelsey, we are down to the last few questions, so if you do have any other questions, you can contact us directly afterwards. So Kelsey, must we find the investment, or does Midland have some options available to participate in?
Yeah, you absolutely have to find the investment yourself. The nature of a self-directed IRA is that we do not sell anything. We don't give any legal, tax, or investment advice. So if you're looking for something just to park money in while you're looking for a piece of real estate, for example, and you just want something that's interest-bearing, like a CD or money market, I mean, we'll help you do research to find some competitive rates in the area, but we're not selling it by any means. We don't give any investment advice whatsoever. So if you're looking for investment options, for example, a piece of property, and you call me and say, hey, Kelsey, what property should I buy? You know, what have you seen lately that's been a good investment? I'm not a realtor. That's not what I do. I do IRS regulations and self-directed IRAs. So you definitely want me just to give you advice on that. So if you need any sort of investment advice, be sure to talk to somebody who specializes in doing that in whatever asset class you're interested in. So, for example, a realtor in the real estate arena, a mortgage broker if you're interested in private lending, something of that nature.
All right, Emily, can your Checkbook IRA own 1/3 of a new business that would be formed with the other 2/3 owned by 2 other direct family members?
Okay, so I think you're asking, can your Checkbook IRA invest in a business in which you would own 1/3 and then 2 other direct family members would own the others? It depends on who those family members are, because depending on what your relationship with them are, the people that are prohibited to the IRA cannot altogether own more than 50%. So it really depends. Are you talking about parents and children, or are you talking about brothers or cousins or more distant relatives? I would definitely need some more detail in order to answer that properly.
All right, if that person just wants to email Emily directly, I'm going to put her contact information up on the screen. All right, Kelsey, 2 questions left. Are stepchildren considered linear?
Okay, so stepchildren. They're a little bit of a black and white area, and really it depends upon state law where you're conducting your investments and things of that nature. There's been a number of court cases, and generally stepchildren are not considered lineal descendants. So stepchildren would be okay to do business with. However, if they're adopted, they may fall into that definition of a lineal descendant. And just to give you an example, the Pennsylvania Department of Revenue does cover stepchildren as a lineal descendant, whether or not they've been adopted or not. So Pennsylvania, the way they have certain cases, they have leaned towards defining stepchildren as a linear relative, so they would be off limits from doing business in your IRA. Now, here in Florida, there has been a case that defined a lineal descendant as a person in any what they call generational level. So adopted children come within the definition of lineal descendants as well there. So really it depends upon your tax advisor to make that call. like I said, again, the majority of people say stepchildren are not if they're not legally adopted, but certain court cases in various states have said why. So it's black and white. It's not a black and white. It's kind of a gray area. Just make sure you talk to your tax advisor depending on what you're looking to do and what state you're looking to do it in.
All right, thank you. Last question. If I have a sub S corp and sell to a friend, how long do I need to wait before my IRA can buy it back?
Okay, so with this one, actually the way that the IRS code is written, one of the things that they say is anything you cannot do directly, you also cannot do indirectly. So the way that your question reads, as we had talked about, your IRA could not buy it from you personally because that would be a prohibited transaction. But what essentially you're trying to do is put somebody in the middle so that you can do it. And if the IRS can determine and does determine that you essentially just sold it to somebody else just so that you could buy it back in order for it not to be prohibited, they actually could deem that as an indirect benefit or an indirect purchase. So I would be very, very careful doing that. There certainly isn't an answer to that as far as a timeline goes. Definitely, if you're considering something like this, I would check with an attorney and get an opinion because, like I said, per IRS standpoint, anything you cannot do directly, you also cannot do indirectly.
Yeah, and just to add to that, this is Kelsey. S-Corps generally do not allow IRAs to be investors, just the way they're set up. I'm not sure if that would apply to a sub-S-Corp as well, but I know generally S-Corps do not allow IRA investors the way they are legally constructed. So definitely talk to an attorney or someone of that nature. But like Emily said, even if you're funneling it through a legitimate third party, that's just indirectly prohibited.
All right, wonderful. That is all the questions that we have for today. If you guys do have any other questions, like I said, feel free to reach us directly. Kelsey and Emily's information is both on the screen, and I will be following up with an email that includes the recording in case you wanted to watch it again. Thank you all, and I hope you have a great day. Thank you, Emily, and thank you, Kelsey.